Hey everybody, welcome to another Forex early warning Monday night webinar. We're going to go ahead and get started here. I guess do a quick audio check. If you hear me okay, type in Y or yes in the queue. I appreciate it. Make sure we're working. Thank you. That's kind of weird. All right. So every Monday we do a webinar reading the charts and coming up with some trade plans. Mark does a webinar on Wednesdays as well that covers the market and also covers a lesson, which is a great way to learn the 35 lessons and learn this Forex thing really quick. Rick and I usually handle this on Mondays. We do one individual currency, all 7 pairs in that group, but we're going to show you the analysis spreadsheet that shows you who is strong and who's weak at analysis. It's going to break down the pairs into individual currencies. That's the most important thing you need to know about the Forex market. There's 2 sides of a pair, and we got to figure out what each of them are doing if it's a tradable pair anyways. We want you to teach you the same thing every week so you guys can do it on your own as well, and also you match up with our second opinion trading plans. And everything we teach, we don't hide anything. We put all our information, our whole trading system out there for free. It just takes you guys some effort to study and learn it. But you'll see it's pretty simple once you watch us analyze the market week after week. This is the same approach that I do it on my personal side versus webinar. It's no different. So make sure you guys read the 35 lessons and then especially the Forex heat map. So we do the spreadsheet at, it's basically like the heat map at analysis. So we're trying to figure out who's strong, who's weak so far. But the future at the present moment will be the Forex heat map tells you who is strong and who's weak at that time in the market. So you know whether to take the trade that matches up with your plans. So we're going to go ahead and look at the spreadsheet really quick. So we look at the far right of every time frame of the W1, D1, H4 of every time frame of the 28 pairs, and look to see if there's a trend. Is it pointing 3 o'clock or converges? That's a no trend. If it's pointing up, then it's an uptrend. If it's pointing down, it's a downtrend. Then the sheet will automatically fill in these 3 columns in the middle, and you compare them to the examples on the right. So in this case, we have some minor dollar strength lining up and on the D1 and the W1. It's not across the board. But if you look deeper onto the other pairs, you'll see that it could be like the USD yen, for example, is showing some strength. So that's why it'd be a no trend on the day. Short term, the momentum has come out of it. So overall, basically, you'd be looking at the USD overall as strength. Swiss group is showing you almost complete alignment on the D1 based on, if you go to the example on the right, the weakness here. So it's weak everything except against the pound. So they could be switching drivers there, or the pound could have some weakness as well, or had weakness. Short term, though, it's not there. So the way I look at this sheet based on trends is, do I have an established bigger term trend, and am I waiting for the smaller time frames to become in alignment with that? Or are we building, do we have no trends and we're waiting for the H4 to start building trends? You can look at it both ways. In this case, the Swissy has some D1 trends in place, could be building some bigger trends, but at this point, based on the D1, the Swissy has some weakness in the market. The euro is pretty well mixed across the board, except short term, it has weakness on, strength across the board on the euro short term. So it has except against the yen, but we can tell by going to the next group, the yen is strong and the USD is strong. So pretty much the euro is strong short term as well. So if you take short term euro strength against something that's weak, like the euro yen would be one that you wouldn't trade, or the euro USD, because it's strong versus strong. But if you find a weak one against those strong trends, then you can have a trade on your hands. So we know so it'd be like the euro Swiss has weakness, euro strength, so the euro Swiss should be heading up, or beginning to. All right, the yens pretty much have been straight changing drivers. We were watching them a couple weeks ago based on yen weakness. They're way overextended trends and they're at resistance, but we had to follow the trend, and then the trend decided to stop at that resistance and come down, which set up some great trade potentials and some great ones tonight. We're going to talk about those as well. There's some great swing style trade setups on that. So we can tell the yen is the strongest one of the bunch on the short term. Is that going to build into bigger trends? Well, that's what we're going to see. We'll see. We want to look at the yen based on that, because we knew before that the major trends were based to the upside based on weakness. The pound is kind of mixed right now, trying to figure out what it wants to do. The Aussie's mixed, the CAD's mixed, and New Zealand's mixed. So overall, you just have shorter term yen strength, shorter term euro strength. We have medium term Swissy weakness, and then we also have dollar strength. So if there is nothing fighting it, those pairs can be dominant in the market. The USD and the yen, they could drive most of the pairs. So let's go look at the yen pairs based on them building bigger trends. So we'll start with the euro yen. So the euro has a little bit of a short-term strength, but not anything other than that. It could just be a little blip in the market. But yen, let's go look at the bigger trend on this one. So the long-term trend on the yen has gone nowhere. It pulled back really hard, came back up, and now it's going sideways. So no trend there. D1 that was the D1 trend. There was a lot of pips to be made in that move, and it's not too late to get back in, because the D1 came down, converged, and now looks like it wants to bounce back down to the downside. So the approach on these yens are all going to be the same, based more on the H4 time frame, but with the D1 guiding you as well. Because if this D1 bounces back open and retests those lows, if not lower, you got plenty of pip potential on that. H4 is showing you it did consolidate. It consolidated nicely. Most of them did the same thing where they consolidated, and now they're starting to move lower again. So we want to look for a trade on this one to the downside. But the euro yen, you want to make sure you have the euro's not fighting you on it, and that's where the heat map's going to guide you. If the euro all of a sudden is weak and the yen is strong, you take the trade. But in this yen group, you're really going to rely on the heat map to take the best of the best. I mean, that's the way you should be looking at it. When you have a whole group doing the same thing, which is the best one to trade, or is there a couple of them? Can you find one that has weakness? Like the Swiss yen should be one should go based on what's happening now. But tomorrow, the market could do totally something different. But let's look at them all the same based on this. So you'd set a price alarm right around 131.76. And the stops are what's great about this type of trade, it's a 2-to-1 ratio. It's awesome. You got, a good, decent stop would be out 40, 50 pips away with a target of, 102, almost 200 pips. So it's a great risk reward. It's a 1 to almost 4 risk reward trade. It's awesome. And that's just based on the H4 and D1 time frame. We love these swing style trade setup. What does that mean? When it moves in a direction, pulls back, and then resumes that direction after good consolidation and fresh cross, these are great setups. But what do we got against us on this one? We got some short-term euro strength fighting us on this, so be careful. Dollar yen will be another one you don't most likely not going to trade, but it will show you what's going on. So we know the euro is strong and the yen is strong. I'm sorry, back that up. USD has some strength longer term, and the yen has strength shorter term. So how do you know which group to trade? Go to the dollar yen. The dollar yen will tell you, who's stronger out of the two. But at least it can show you what's going on in these yen pairs. So the dollar yen basically hit resistance and is failing off that. The weekly is still to the upside though. Daily is converged, looking like it wants to fail off there. And then the short term is showing you it wants to drop even lower. So you're going to watch those lows. And if it does continue to move, you're mainly going to be using this group as a guidance and confirm that which other groups you're trading is stronger, because you want to look at the dollar group the same way we're looking at this yen group based on those swing style setups on H4 timeframes tonight. All right, so pound is pretty well mixed. So we got the weekly is no trend on this one. The daily did move down, but came right back up in a similar style setup. So basically the H4 is going to be our guide. You can see it dropped hard, pulled back, and now it's resuming that downtrend. So from where it's at now to the lows, you still got almost 200 pips potential on it. So that's pretty awesome. So the stop on this one's going to be a little higher because this thing's been chopping around because the pound had some strength and the yen had some strength. So the only way I would take this one as well is if I had pound weakness on my side as well. But if the yen is just dominant and no other currency is fighting it, you can take any one you want pretty much because plenty of pip potential. So it's going to be the same thing on each one of these, except you're going to see the longer term time frames are slightly different on them all. Like this Aussie yen weekly, it's been consolidating for a long time. The weekly is just going sideways. The daily popped down, but we came right back into it. No trend on the D1, but the H4 is setting up nicely as well. So great trade setups on this shorter term trades. And this one has 140 pips or so of potential with, it's previous highs are 40, 50 pips away. So another one that's a good risk reward ratio. Swiss yen should be one that should be a bigger mover because we know the Swiss yen has weakness and yen has strength. So the W1 on the Swiss yen is converged, going nowhere. The D1 came down really hard. I mean, that one moved really hard. Why? Because the Swiss was weak and the yen was strong. And the D1, you can tell the difference on this. Look at this D1 is pointing to the downside. You go back to the Aussie yen, D1, and it's not as converged because you got the Aussies fighting the yen a little bit. So that should give you a clue as well. So the ones that are moving the biggest and the cleanest are the ones you want to look at here because it's strong versus weak or weak versus strong. So let's go to the H4 time frame, same exact setup. We move down, pull back, resuming that trend. So at least you got your simple targets, simple entry points. This one has about 130 pips to go. And same thing, they got next stop areas 40 pips away. So you got 1 to 3, 1 to 4 risk reward ratio. Great little short-term trade setups. All right, New Zealand yen, same thing, converged on this one's totally going sideways on the weekly. The daily is totally going sideways as well. Converged is a lot more choppy. That shows you that the New Zealand is fighting the yen. So there could be some strength coming in this Aussie New Zealand group, but not dominant, just enough to cause us some trouble. And the H4 is all you need to know. So short term, it looks a great trade setup. And you're looking at, on this one, same thing. You got over 100 pips, 150 pips potential, 40 pips stop. I mean, the shorter term, the yens are all moving identical, which is pretty fantastic. Last but not least, the CAD yen weekly hasn't converged yet, going sideways. D1 has not opened up yet on this one either. It could bounce open if it comes any lower, but this is why, because this thing had it consolidated and it just broke this consolidation today. So it's a very, very fresh move to the downside. So you're going to want to watch these lows. Let's see how much room there is to go here. Yeah, 150 pips. So pretty consistent on this on these trades. Just watch these short terms charts, H4 timeframes, put a price alarm at the lows on those H4 timeframes, and then wait for the push to, price alarm or your push tab to tell you who's strong. If all of a sudden it shows you yen strength in the main session, you'd be looking to take some trades, especially short term, which is pretty fantastic. So really clean, easy trade setup. We can see how the longer time frames are not all the same, but if this continues to build down, and then if it even breaks lower, let me go back to the D1. If it continues to break lower on all these yen pairs, then the other larger trends will start to follow, and then you'll start trading this into the next support level. So very important what it does next. It's going to retest these lows, and if it breaks it, then bigger trends are coming your way. So that's the most important thing. So make sure you look at the USD group the same way. It's not as clean and easy and consistent as this yen group, but at least you're going to be looking for those same style trade setups on it. So if you have any questions, I'm more than happy to answer anything you got to ask. If you got a long one, we always recommend typing the letter Q in the queue, and we'll wait for you. Otherwise, we don't wait too long because sometimes you're scrambling to type it up because something hits you. But a lot of times we don't have questions, so we'll just let it go and let you guys have a good day. So make sure you check your news calendars as well, because those things could be the drivers. They're not the thing you live your life around, but you want to be aware of drivers that would cause it to go down, or to move. But usually, all the news is usually built in. Most of the market stuff is built into the market, and the only thing that's going to move the market is if the news comes out opposite of what it usually does. So I'm just waiting for someone to type in a question here. So it's got a Q in the queue, then we'll answer that. What would make you stay in a sell on the yen pairs when they hit support levels as opposed to taking profit? Based on is the trends? The trends tell you everything. So let me show you because we got a lot of fresh trends forming. So if this trend, if these H4s move down to support, I will probably take some profit and manage it accordingly. If it breaks it, I'm adding lots back on. So there's no right or wrong. If you're unsure, it's always safe to take profit, but if it's easier to manage a trade than it is to get back in a trade too. So if in this case, so what we're looking at, the CAD yen, the weekly is not converged yet, but if it goes down and tests those lows, you're going to have a fresh cross on the weekly time frame. So that would tell you how long to stay in. And my time frames tell me if it's a weekly trend, I'm in it for weeks. If it's a daily trend, I'm in it for days. If it's a 4-hour time, I'm in it for, multiple 4 hours as a time. I'm in my trades many, many days usually, sometimes weeks. So it really depends on the trend and what they're starting to do. So in this case, the weekly hasn't even converged yet. The daily has a fresh cross. It formed a fresh cross to the downside. If it moves down, then we have a really strong D1 downtrend. So you're going to stay in that for as many days as you can until the drivers change. That's the drivers tell you when to get out of the trade. If it's yen strength, yen strength, yen strength, why would you get out? If it's all of a sudden starting to change where yen's starting to weaken across the board, and that's, well, short answer is the price, but not the price at the same time. It's the price. It's really strength and weakness and trends. If it's a fresh trend and the yen is strong, and yen is strong, I'm staying in it until that changes. When the yen starts weakening across the board, then I'm out. And if it happens to be at a support level, then great. So I really let the charts show me what to do and show me what's strength and weakness is. And sometimes when I'm going to trade, the push tab all of a sudden keeps showing me the drivers are continuing in that direction. I only have to look at the charts because I know my trade is moving. If all of a sudden my push tab says it's going opposite of what I'm doing, crap, I better get in front of the market. It's that simple. Strength and weakness, fresh trends, ride it out till the price point you want to get out at. But it's your call. I mean, a lot of people take profit, it's close half your lots and let the rest ride if it's a stronger trend. You have to learn to hold on to trades as long as you can in the direction of a trend. Don't hold on to a trade when it's going against you. I think more people in here probably tend to hold on to trades longer that way than they do in the direction of the trend. As soon as they get profitable, they get freaked out and take the trade, when it should be the opposite. You should be hanging on to them in the direction of the trend and getting them out early if it goes against you. So I hope that makes some sense. All right, it looks like that is the only question we have. So hopefully that answers your question. If it doesn't, keep asking until it makes sense, because using live examples is the key. It helps you see it live in the market. So you guys have a great week, and we'll talk to you next week. Thanks.